Welcome to the bullpen. It's our monthly conversation about markets with Tommy Grisafi from Advanced Trading based at Mayville, North Dakota. Tommy, as always, we appreciate this chance to connect and kind of dissect what's happened in the markets and what's ahead. And as we look back to this month of April, it was a pretty volatile market and one that really went to the downside.
Yeah, April really woke people up, Don, for what happened in corn, wheat, beans, hog market. It was a very volatile market. I mean, you're talking some of these markets lost 50 cents. And of course, we still have the war going on. So you have people running around saying, don't you think grain should be higher? Russia invade Ukraine. But when you study economics and you look at markets over time in history, when you shoot something like wheat up, which has grown all over the world up to $12 and keep it there for quite a few months, you get a lot of people to plant wheat. And during the month of April, we had Canada, your neighbors to the north, announce that they're going to plant a bunch more wheat. And that really got the market knocked down towards the end of April. Whether they plant it or not, or whether North Dakota plants it or not, I know we're a little behind. The world's planting wheat because when the markets go up that high, and this is probably going to make clients laugh, or people watching this video laugh, when the markets go up that high, they're telling the whole world, be a wheat farmer, it's easy. And now they're a wheat farmer and the prices come back down and it's not so easy. And that's the process over and over. This isn't a new phenomenon.
You mentioned Canada. That Stats Can report came out, a million more acres of wheat. That survey was done, though, late December, early January. We looked at our prospective plantings report, comes out at the end of March. At least in this part of the world, things can change a lot from those times to when we start turning the wheel.
Absolutely, but the hedge funds with all the money, they don't live there in Grand Forks where you are. Or I'm in Iowa this week. They live in New York, in London, and all over the world, and they see numbers and they crunch math. And there's some guy in the back room who's got more degrees than we've ever owned cars in our life, and they're just crunching numbers saying this is really bearish, and then the markets start to trade it, and then it just feeds on itself. I mean, we've all been seeing scenarios where we didn't think the acreage was true or the numbers were true, but the margins at the exchange have to be met every day. And so if you're correct and we don't get as much wheat up in Canada, which is very possible, it's still cold and wet and the snow's melting, and North Dakota's a little behind, but they can get caught up pretty quick, then it's a huge buying opportunity. But if farmers do what they do best and get the crops in and Mother Nature cooperates, we'll be ho-hum prices. Excuse me. We could be ho-hum prices for quite a while.
Talking planting progress, numbers out here on Monday to start the week. 26% of the corn planted nationwide. That's up from 13% last year. 19% of the soybeans versus 7% last year. I guess fears over a late planting season are behind us.
Very much so. And as I drive around Iowa and South Dakota and North Dakota next few weeks, in Indiana, and go meet clients, the panic date in my mind is usually May 10th, May 15th. Hey, we got to get it in. I think a majority of advanced trading clients will be done planting by May 15th.
The forecast looks a whole lot better now.
In the I states. Let me correct myself before I get the hate mail. In the I states.
Yeah, no doubt. Not the situation, obviously, in the Northern Plains, but that forecast looks better. So I think attitudes really changed once we got into this week. And I really didn't see farmers too nervous, especially they look back to last year when we got such a late start and still had a beautiful crop.
Correct. And they have to be very careful. The scenario that happened last year, from when they put that crop in the ground to when they harvested, was almost a perfect weather scenario. And they're not guaranteed that. And as you know, things can happen where it's not uncommon at all to get a late August, early September frost, and that would just absolutely decimate so many of your crops up there. So we got to be careful thinking it's our right to plant on June 5th and everything goes okay, but it's a risk. But right now the markets don't seem very worried about it.
The other big news, we had another bank failure, second largest bank failure happening this week. First Republic Bank, JP Morgan came in and the government also backing up those losses as well. This is ahead of a Fed meeting. They're going to be making announcements on interest rates. Does this kind of reinvigorate that worry about the economy?
It does, and we're having volatility again in interest rates and the stock market. But overall, the stock market, when I talk stocks, the S&P or the Dow Jones or the NASDAQ is starting to trend up. I mean, we're at levels that are not that bad of levels. I think if people are relooking at their investments in 401ks, they're seeing that those have re-inflated here in the first, we're 1 quarter and 1 month into 2023. Those investments have very much reflated. And I think it's interesting because everyone's saying, oh, the economy is so bad and there's layoffs and there's tech layoffs and AI is going to take your job, yet there's still help wanted signs everywhere. But when you do listen to uh, big time economists, they're really starting to see a lot of weakening or slowing all over the world. And sure, that bank failed and magically they're bailed out. I heard an interesting thing about banks the other day is that why would you ever buy a bank at full price for you can when you could buy it for 1/10 of its previous value the week before or 1/20th? And I just kind of smirked and I listened to that in the business channel. I'm like, they're not wrong. These banks go for sale because they were run poorly. And I guess message to the farmer: if you run a business poorly, there'll be someone to bail you out. It'll just be for 1/10 of what you thought everything was worth. And right now, the ag economy is the exact opposite of that, where land prices are high, commodity prices are okay, and they have a lot of long-term debt locked in at very low prices. I met with a client yesterday and we talked about the 80s versus now, and they're not quite the same. It's a much you can go sell a tractor and you have people fighting over it right now. Now, if that ever changed, where land prices became soft on and used equipment fell apart and the markets really fell apart, we could see some pain in agriculture, but not quite yet. And but we did have some bad news the other day in agriculture that a large hog company, I believe, was closing or filing for bankruptcy, and that was kind of the news the last few days. So that's not good to see. You know, over the last few years, we've had some amazing hog prices. Take those away for 6 months a year, and it doesn't take long to go underwater.
You've got a plant in southern Minnesota that's going into bankruptcy. Then you got Smithfield Foods that's they shut down, I think it was 37 sow operations in northern Missouri. That obviously is a reaction to this hog market, which has been pretty ugly as well. Fed, as we mentioned, we pretty much dialed in with a 1/4% interest rate hike here. Is that what we're looking at?
Yeah, yes, sir. There's a nice tool everyone watching this video can go to. You just go to CME FedWatch. It's the CME Group's FedWatch tool. And if you go that, they'll tell you the exact percentage of what they think a 1/4 point raise is. So maybe today it says 78% chance of a 1/4 point raise. When you look at the interest rates, the short end interest rates are much higher than the long end. And right now rates are still high. So if you have money, again, 30-day CD, T-bill, call it what you want, any interest rate product. We've seen some neat things happen over the last few days. And last month in April, Apple came out and said, I think they'll give like 3.8% or something like that on money on the Apple Card or an Apple deposit. And it's interesting because a few years ago, I remember you and I were in Grand Forks doing a meeting for maybe the small grains, and if banks that had excess cash, it was a huge liability. That cash was not only not worth much, it was worthless. And that sounds very odd to say, but it really happened. Some large banks and even medium banks were penalized for having extra cash. And that was forcing people to the stock market. But finally, people in retirement age, if they have extra money, or you don't have to be in retirement age, just wealthy people have an alternative to the stock market, and it's called interest rates and earning money the old-fashioned way, conservatively, versus investing in a tech stock or the S&P. So there's alternatives, and that's giving a little break to the stock market.
One more thing in this grain market, and that's China. They've been canceling some of their U.S. purchases. They've done this before and come back into the market and get a better deal, but that certainly hit the market this past month as well.
Yeah, so China, the best trader in the world, our best customer in the world, they play dirty pool. I mean, a deal's not a deal with China. A deal could be a deal if they decide it's a deal, and no other person gets to do that in life. And that's why we don't talk super nice about them, but we do appreciate what they buy. I don't know if they watch the bullpen video. I'm not a big fan, but imagine what American agriculture and the world would look like without trade with China. and it's just what they do. There's also other reasons they could have canceled. I'm literally sitting here 1/8 of a mile from the Mississippi River, and as that Mississippi River filled up, they shut down locks. Like they say, oh, we're shutting down lock this through this from Illinois to here for next 3 weeks. Well, that is such an important way of moving grain. So grain through the main artery of America is pretty much stopped flowing a little bit, and that had an effect on things.
No doubt. Well, it's always good to talk markets. Tommy, thank you for joining us for our monthly update on the trade. Tommy Grisafi from Advanced Trading based in Mayville, North Dakota. Until our next edition of the Bullpen, I'm Don Wick.